Strategy and Advisory with Prabhudas Lilladher joins us with a quick fundamental take. Ajay, good morning and thank you for joining us. 15% or more than 15% on the Nifty after a 15% run-up. How would you map the risk-reward ratio? Do you think there is still money to be, there's still money left on the table?
Well, much as the bears would like the rally to halt, what clearly what we are seeing is that India is in a sweet spot. And not only are we seeing a torrent of FI flows in equities, but even on the fixed income side, roughly $8 billion has poured in since the beginning of January. Although I must say that $6 billion out of those have poured in at the short end, which is something we must be careful. And the RBI governor has ensured that going forward, I think most of the money will be coming in only at the long end of the curve. I think there are multiple reasons why there is buoyancy in the Indian equities, and I think that the positive bias or the upward bias should continue till 16th of May, when all of us are expectantly waiting for the kind of mandate that the electorate will return. I think the hope rally is continuing. We are seeing the external sector that has stabilized, and hence the concerns on current account completely abating. Although I must point out that the strengthening rupee is giving jitters to exporters. Exports that were in double digits in June and July have come down, and in fact last month was a negative insofar as export growth is concerned last month. We need to ensure that as long as the inflation differential between India and our trading partners continues to be high, I think at least that much of depreciation in rupee is necessary to ensure that our exports are not rendered uncompetitive. And I think a strengthening rupee will be watched with some concern by the export community. And hence we need to ensure that these large inflows that are coming in are absorbed by the RBI, and the resultant money flooding in, the rupees flooding into the markets are sterilized by selling gilts. So I think this is something which will be very important going forward. As you see FI flows coming in, rupee further strengthening, the RBI needs to be more activist in ensuring that these flows are absorbed and the rupee is kept at a competitive level, and the current account does not again go out of balance by ensuring that the exports continue to be competitive.
Ajay, what is it that you made of the trend in the IT pack yesterday? Given the kind of bounce that we saw overnight, the US markets have done pretty well, and the tech-heavy NASDAQ as well has bounced up very smartly. Could yesterday be read as a trend day, and would you now recommend your investors or clients to start buying IT on dips if at all one gets?
I think I would tend to agree with you completely. I always was of the opinion that the IT companies fundamentally are doing extremely well, with their largest market, America, coming back roaringly in terms of economic growth. We are expecting 3.5% GDP growth. Our interactions with the IT companies is showing that the inquiries have gone up massively in this year, vis-a-vis last year. The pricing power is coming back with the IT companies. They're expecting a stronger volume growth. I think with the exception of the headwinds that they are facing on the currency front, in my opinion, I think over the next 12 months, as I just mentioned in the previous answer, for the exports to be competitive, the RBI will have to ensure that the rupee is somewhere between 63 and 65, 12 months from hence. Gradual slide, because inflation differential will continue to be high. So even that headwind should not really be a problem for the IT companies in the medium term. Overall, I think I expect IT to be there, to be kept as part of core portfolio for investors, and especially companies like Wipro, Infosys and Tech Mahindra in the large cap space we are recommending. We are looking at a 12-month hence target price in Infosys of around 4,150 rupees. In case of Wipro, at around 600 rupees, an upside of around 660 rupees, upside of 17.5% from the current levels. And in Tech Mahindra, we are expecting a target price of 2,080 rupees. In the mid-cap space, again, there are some very good picks in the IT space if one is willing to bet in the medium term. Mindtree and Persistent Technologies comes to mind. We are expecting a target price in Mindtree of roughly 1580 rupees, an upside of 16% from here. Persistent, though, I think should be bought on declines, because the upside there in our view is limited to around 10% from the current levels to 1150 levels. So I think IT should form a very strong core in any portfolio, and the fact that they have underperformed in the last 1 month clearly has made them more attractive, because we have seen a massive surge in capital goods and banking stocks, where I think in my opinion in the short term there's not much money to be made.
But the reason why IT is underperforming is because rupee has appreciated and numbers are pretty much out in the open. A 1% appreciation in rupee could erode an average margin for IT company by about 0.5% to 1%. So some would argue that the current price trend in the IT stocks is a function of the currency movement.
I agree with you, but that's what I said. What I'm postulating essentially is that with a sharp differential in inflation between India and trading partners, i.e. EU and US, I think it's the RBI will have to be more activist and not allow this massive upsurge in rupee to continue to hurt the tradable sector, especially when the global economy is recovering. And the fact that the current account has come under control is because the exports have been doing very strong, in addition to the fact that imports of gold have been curbed. But I think in 12 months, the RBI will have to actively intervene and ensure that the rupee continues on a slightly it depreciates very smoothly to around 62 to 63 levels. And hence, I think that headwind that you just mentioned should, in my opinion, not in the medium term act as a big barrier for performance of IT stocks. But fundamentally, I think the demand environment is improving, pricing power is coming back, volume growth is going up, and hence I think if you just leave aside the rupee, I think the overall environment is quite positive for IT companies.
And holding on, Ajay. For the moment, it appears that gas price hike has been deferred indefinitely. That's bad news for Reliance. Markets were hoping that gas price would go from 1st of April, but that's not going to happen anytime soon. So with this kind of a news flow, Reliance should be sub 900, but it is almost at 950.
Well, I think it's been deferred till such time that the new government assumes charge. And I think then it will be in the domain of the new government to look at this whole issue ab initio. And in my opinion, I think we got to wait it out what kind of formation we have in Delhi. And the decision, I think, in my opinion, should not be deferred indefinitely. But sooner or later, I think the government will have to take into cognizance the fact that the imported LNG prices are at multiple times the current $4.20. And in case, I think, we do not make the sector more competitive for the domestic exploration companies, I think our dependence on precious on imported LNG and hence the precious foreign exchange outgoes, I think we'll have to balance that out. So from practical point of view, I think any government taking charge will have to relook at the gas pricing issue dispassionately and put in policies that enhance the domestic players in exploration sector.
Well, the one basket which is going to be in focus is definitely the contenders for the bank license, and the Election Commission has now given the nod to RBI to issue new bank licenses. So the stocks in focus: L&T Finance Holdings, IDFC, LIC Housing Finance, Shriram Transport Finance as well. Not that these stocks haven't run up already, but perhaps some bit of more upside is what you can expect on these names. Ajay, what is it that you're recommending to your clients when it comes to the bank license hopefuls? Any of these names? L&T Finance, IDFC, LIC, Housing, etc.?
I think we were strongly recommending Shriram Transport, and not based on the banking license per se. But the stock had fallen quite sharply a month and a half back. But I think the kind of ferocious run that one has seen in names like Shriram Transport or even Yes Bank, which was among our top picks, currently there is a little bit of juice still left in these names. But I think more or less the rally that one has unfolded over the last month has rendered the companies from a valuation perspective a bit too difficult for one to advocate to jump in right now and buy. I think as you mentioned, the names that like L&T Finance or IDFC have been right at the top insofar as the market expectations for getting a banking license is concerned. Though I have my doubts whether an announcement that these companies have won the licenses should in any manner lead to a further re-rating, because our analyst believes that it's a long haul, and to start with, for the first few years at least, I think the conditions are too onerous on part of the regulatory requirements, the requirements on the CRR, SLR, as well as on the loans to agri sector, etc., which would depress the return ratios for some time to come. So the good news will have to wait for a few years insofar as return ratios are concerned for these entities. And I won't be really taken in with the announcement of these names.
Okay, quick break on that note. When we come back, stock ideas from Mitesh, and of course get set for the pre-open rates as well this morning.
You saw the 3 campaigns, you've cast your vote, and now it's time for the jury's verdict. Catch an eminent panel, Milan Deora, Akshay Rao, Piyush Pandey, Amitabh Kant and Anupam Kher discuss, debate and deliberate and finally decide the winner of Brand Equity's special initiative, Vote India. Only on ET Now.
Presented by Mark Monitor, protecting brands in the digital world. In association with Yatra.com, creating happy travelers. Get office-like cooling at home. Blue Star, breathe easy.
Presented by RPG.
Multiply your drive, get more out of life.
Presenting the Hyundai Accent, the real family sedan that multiplies your life. Hyundai.
What if your portfolio could look into the future? What ideas will drive tomorrow's markets? Which trends and patterns will create opportunities? What will dictate the movement of the indices? Turn today's strategies into tomorrow's perfect opportunities. Catch Markets Tomorrow, only on ET Now.
Okay, back with trading calls right here in ET Now. Holding up well in terms of global cues as well as the SGX Nifty. And yesterday, after a bit of a listless, wobbly sort of start, we finally managed the finish line at 67.21. But the SGX Nifty this morning holding up a gap up start is what it's indicating. 56 points higher, 67.77 in trade. Mitesh, what trading ideas would you then recommend?
I've got all buy calls today. Dabur was a stock which made fresh all-time highs, clearly suggested another up move can happen in the short term, good momentum support. Buy in the range of 186 to 188, keep a stop below 182, look for targets of 198 to about 200. Tata Chemicals is a buy with a stop at 286 for short term targets of 306. Tata Global is a buy with a stop at 150 for targets of 162 in the short term. I've got a buy on Tata Motors DVR, which is performing better than the Tata Motors stock in the short term. This is a stock which has made a fresh all-time high. So buy with a stop below 205 for targets of around 225, 226. And I've got a buy on Kane India, which had a very strong price and volume action breakout yesterday. Buy with a stop below 335 for slightly positional targets of 370.
Ajay, Tata Motors finally has got its mojo back. The DVR yesterday touched an all-time high. Do you think there is still money to be made in Tata Motors at a time when the currency is not that favorable?
I think internally our target price is 440 rupees over the medium term or 1 year period in Tata Motors. I think the domestic business, although that contributes less than a quarter of the total pie, I think continues to face tremendous headwinds. In fact, our interactions indicate that even FY15 for the CV industry as a whole will continue to be at best flat. And that too sort of, with the growth coming only in the second half of the year, the first half continuing to show slide insofar as the volume growth is concerned for the CV industry as a whole. Globally, I think the slowing China is sort of, emerging as a bit of a worry for investors in Tata Motors. although the improving fundamentals in both UK, US as well as Europe, I think as well as the launch plans that they have for the medium term, in terms of the vehicle launch plan for both the JLR as well as Jaguar, I think make us positive on the stock. So I think overall, looking at the price rise in case of auto stocks, I think there's one stock I would bet on in the medium term, to Tata Motors.
Some other names that you would want to look out for in today's trading session, of course, Axis Bank, wherein the FIR shareholding is now at 49% and RBI has restricted further purchase in this name. Mitesh, I just want to quickly get a call on the chart pattern for Axis Bank from you.
See, I think this stock, after having run up a lot, is now showing signals of slowing down around the earlier highs of 1500 or so. The stock has, strong resistance in this area of 1500, 1530, with 3 or 4 monthly closing highs being in this area for the last 4 or 5 years. So I think now traders should wait for either some kind of decline or pullback to happen, or wait for the stock to start getting past 1530, 1550. After which I would, look at a possible targets of around 1750, 1800 for Axis Bank. So in the short term, it's a wait and watch. The structure is positive, either buy on declines or buy on a breakout.
Ajay, the market currently clearly is in a mood to revisit cyclicals and economy-related stocks, but there are select names from the FMCG space which is still considered as expensive and a sleepy space are doing well. Jubilant Foodworks, you've got Dabur, Bata, and then VIP.
I think in addition to that, Nikunj, I would also look at stocks like Britannia Industries and Pidilite in the FMCG space. Fundamentally, I think our analyst is very positive on these names. In Britannia, especially, he's looking at a target price of 1110 or a 12-month perspective. He's expecting a strong revenue growth of 15% in the current in FY15. With the earnings growth of around 21% in FY15, followed by 23 to 24% in FY16, and with a strong ROE of around 52% expected in FY16, 47% in FY15. He's expecting an upside of around 32% in a 1-year period in Britannia. The second stock in FMCG is Pidilite, where again we are expecting a strong growth in earnings of around 22% CAGR for over 15 and 16, and a strong ROE of around 29% in FY15. Valuations there again remain at around 21 times FY16. So I think these two stocks in FMCG space can, in our opinion, still offer a good value in the medium term.
What about Dabur? That had a strong day. As a house, do you cover Dabur?
Yeah, no, I think we don't cover Dabur as of now.
Ashwini, Dabur had a strong day. Do you think Dabur could have another strong day today?
Well, generally it's a bit of a choppy stock, but yes, it's hit, probably all-time highs if I'm not wrong. And chances are that, FMCG is showing action. Levers has reached 600. ITC also had a sharp rally. So chances are next target for Dabur could be closer to 210, 215. It's not a target it'll reach tomorrow. $30 for Dabur can take, about 6 months.
Well, the two stars of this leg of the rally are ICICI Bank and then L&T. L&T in this year has appreciated by about 20% plus, and ICICI Bank, the quantum of appreciation is on similar lines. There you go. L&T this year has appreciated by 19.6 if you want me to be precise. ICICI Bank this year has appreciated by about 11.5 to 12%. Ajay, come in on L&T and ICICI Bank because these are two pillars of this leg of the rally.
I think been advocating them as top picks in our monthly lists now for last 4 or 5 months. But the fact that they moved up so sharply sort of is making me worry of jumping in right away and advocating a strong buy in both the stocks. I would rather that they consolidate at the current levels and move sideways for some time to come, absorb sort of the up move that one has seen, and only then sort of I would jump in and strongly advocate buying. If banking is a sector sort of that one is looking at, I would still see that there are good values available in banks like Federal Bank, where we are seeing an up move up to 115 levels. It's around 93, 94 levels currently. ING Vaishya, which also has not participated to that extent in the rally, where in the medium term we are looking at a price of around, say, 675 to 700 in the 1 year period. In case of capital goods, I think both Crompton Greaves and L&T have moved very sharply, and I would rather wait for the time correction before jumping in these names.
Ajay, what is it that you've made of the mixed trend that we are getting from the monthly sales numbers for auto companies up until now? And how would you distinguish going into the next month, or rather this month itself, and what would be your allocation amongst the auto basket?
Yeah, I think in autos, one will also have to keep a very close watch on what kind of monsoon forecasts are sort of trotted out by the IMD, which should happen sort of over the next few weeks, because a lot of rural buoyancy demand has been upholding sort of the strong trends in stock prices for Hero Motors and Bajaj Auto is concerned. I think in our opinion, most of the up move in auto stocks has happened, frontline auto stocks, and that's why I think in answer to the previous question of Nikunj, I said that Tata Motors is the only play where we are seeing fundamentally a 10% upside. But we would rather look at the auto ancillary pack and look at a company like Motherson Sumi, where we believe that there is still scope for a very strong up move from the current levels. The stock has done very well over last 1 year, but the improvement in the fundamentals both domestically and in Europe makes us believe that the stock could in the medium term touch around 300 levels. So that is one stock that we would advocate as a core in a portfolio of investors in the medium term.
Okay, quick break on that note. When we come back, chat with Mahesh Patil, Fund Manager, Birla Sun Life Mutual Fund, Pradeep Shah from Main Asia Fund Advisors, and of course the pre-open rates as well this morning.